Good afternoon and welcome to the Family Office webinar. As the economy starts to open and prepare for the world post-COVID-19, we are asking ourselves when and how will the US economy open? Through our New York office, we have been following the development on the ground coming out of the US. And for this webinar, we invited the chairman of the Family Office based in New York, Mr. Robert Castignano, to help us shed some light on various topics.
Good afternoon, Naji. How are you?
Doing well, Robert. How are you?
I'm great, thanks.
Let's start with some intro. Bob, you spent 20 years at Goldman Sachs, and you've helped build their franchise, their wealth management franchise in Hong Kong, Japan, also in Singapore and Tokyo. Tell us, what has been your experience there? And most importantly, what has been some of the successful families that you've met and their habits of investing?
Sure, but before I get to your question, one, I want to say thank you to you, Letitia and Gladys, for all your efforts to make this happen today. And to all of our clients and prospects, guests, Eid Mubarak. I hope that you're all well and safe. In terms of your question, Naji, and my experience in dealing with wealthy families, I think the most important thing is that those families understood how to invest as opposed to how to trade. And the investment thesis that they had was to look at businesses rather than stock prices or bond prices. They looked at businesses that had real cash flow and that were relatively good risk reward kinds of investments.
And after you spent these 20 years at Goldman, you retired, but
Right.
then that retirement was short in a way that you volunteered. You took a volunteering role within Sandler O'Neill. And the story there is very interesting. Maybe you shed some light on that appointment.
Sure. So Sandler O'Neill was one of those firms, a very credentialed investment bank, pardon me, in 2001 that had been impacted by the events of 9/11. I went back initially as a volunteer to help them rebuild their distribution group, and I had intended to retire and go teach, but obviously that didn't come to pass. And most recently, the firm merged with Piper Jaffray, which is a similar mid-size investment bank out of Minneapolis. However, they're public, and so now we're a financial services division of that firm.
I've known you to be very modest. I think it would be good to say also that when you joined, it was post 9/11. That's when Sandler lost almost 40% of its staff. And that's when you came to the calling and you rebuilt that business, that equity division mainly of Sandler O'Neill. And today it has been one of the most successful brokerage firm specialized for financial services.
Yes, that's correct. The rebirth or the rebuilding of the firm took place from around 2001 to 2003. And obviously with the help of a large number of people, not only who were legacy Sandler O'Neill employees, but then people who came to the firm in the aftermath of those events. And as of December 31st, 2019, we were 5 offices, 300 people, and we were representing more than community banks, asset managers, insurance companies, specialty finance, real estate, and so forth.
Coach, also you've joined the Family Office Board of Directors since 2007.
Yep.
How have you seen the evolution of the firm since that time?
I'd say there were 3 things, really. What we promised, Abdul Mohsen had a vision early in the birth of the firm about giving families, particularly wealthy families in the Middle East, access. And he felt very strongly about 2 things, not only access to international markets at a reasonable price, but also a concept of asset allocation. So it began with folks like yourself joining and doing some internal asset allocation. And then primarily through his relationships with very large private equity firms and real estate firms like KKR and like Related, we were able to do outsourcing partnerships where we had access to their deal flow on behalf of our underlying clients. And then lastly, in the aftermath of some events in the Middle East, I think he made a very, very smart move to do two things and to relocate our asset management platform in Zurich, where you're the CEO of Petiol. And lastly, and I believe all of our clients have access to our app where we have digitized much of the information that the firm has, as well as giving them, relatively speaking, instantaneous access to where their portfolio and how they've performed. So it's been a really interesting evolution, and one that I think certainly I'm very proud of, and I think our clients have benefited from.
And I would say, Coach, having you as part of the team is very rewarding because you're quite engaged chairman, and we're always in constant dialogue with you. And I mentioned Coach, maybe for those of you who don't know, Bob Castignano, he earned a title on Wall Street, and that title is Coach because of his kindness and also his willingness to help young people and help people and see them succeed. And maybe it's natural for me to say Coach, so we'll continue with that. So you have been designated coach of Team USA.
Yeah.
And we are in the middle of the game, COVID-19 against Team USA.
Yeah.
You are seeing the team, your team, USA, not winning that gold medal, I would say, of COVID-19.
Okay.
What would you tell your team? What would be your tactic today?
Yeah, so the way I think about it is certainly influenced by the fact that I'm 70 years old and I've been through other pandemics from 1968 to 2002 to 2009. And so, you know, if I had to look at the outcome today, particularly in America, where democracy always tends to be messy, and the preponderance and the epicenters of this particular virus in America tended to be in densely populated cities and on both coasts. And so trying to navigate that is like a rifle shot in the sense that the middle of our country had less cases to begin with. And so there was definitely dialogue and definitely a differing point of view. So going forward, what do I think the issues are? The key phrases over the last 90 days, not only in the United States, but globally, was about two things. You wanted to flatten the curve, and you wanted to make sure you didn't overwhelm your healthcare system. By definition, when you flatten the curve, you're going to extend the pandemic. Somewhere in the middle, you will have some access to herd immunity, as was attempted up in Stockholm and in Sweden. And the epidemiologist who was running the system there felt that was in their best interest. So right now, I think my personal opinion is I don't drive my car down the street looking in the rearview mirror. I could care less. I'm looking in the windshield. So I think that globally, governments now, by virtue of their decisions in China, in Italy, in Germany, in the United States, have given themselves less optionality with respect to this, and we now need a vaccine in order to get back to normal life. Fortunately, this particular virus, the RNA has been mapped. There are, in my opinion, 4 firms, Merck, Moderna, Sanofi, and Gilead, who are in a race along with global scientific minds. And the good news is this one tends not to mutate. So the global scientific community is shooting at a static target. And I do think they'll announce a vaccine in 3 or 4 months. And then obviously the issue is, how quickly can you reproduce enough of the vaccine to make people comfortable.
And if you were to envision that is happening and the US economy reopens,
Yeah.
how would that reopening be? And most importantly, how do you see businesses coming together? Yourself, you talk to a lot of businesses in the financial sector. What's their plans for coming and opening up? How the behavior of people is going to be when the opening up of the economy? What's your view on that?
Well, so 37 or 38 million people are unemployed right now in the United States. Yeah. They were all encouraged to sign up for unemployment so that they were eligible either for the Payment Protection Program or Main Street Lending Program, depending on whether you were an individual or business. Going forward, I think that in 90% of those cases, there will be businesses to come back to. And in 10%, 3.5, 4 million people, those businesses, whether it was a marina or a restaurant or a gymnasium, healthcare facility, they won't be there. If I were in charge for a day, I would look back at this and look at history as a guide and say, in the aftermath of 1929, the crash and the Depression, there was a federally blessed program, the Civilian Conservation Corps, CCC, and the federal government was in the business of hiring people. Today, if I fast forward 100 years later and I look at my country, the thing that I would do is I'd have a federally blessed program that looked at hiring people to redo our infrastructure. I think it's a bipartisan issue. I don't think people would have an argument with it. And I think it would present a conduit of sorts to getting those people who come back to no job to make sure that they knew the federal government had their back.
Great. I just want to mention to the audience, Coach, that we have a chat box. You can right away ask your question through in the internet. We will get it and we can ask them to Coach and he will happily answer them. So use that. I will do less of the talking and Coach will happy to answer any question. Coach, at the beginning of this year, we had a lot of attention on the election, on the US election.
Yeah.
Today, barely everyone is focusing on COVID-19, understandably.
Yeah.
But soon enough, we're going to go into that election mode. But we are in a world of social distancing, less large gathering and campaigns. How do you see that US election working from, let's say, a logistic point of view, and also from an agenda point of view and the focus on the candidates' agenda? Okay.
So again, I'm not sure I know exactly how the voting will take place, but my sense is, apropos of what we discussed earlier, in the middle of the country where there were less cases of COVID-19, I think voting will take place in person. I think the coasts where there was a preponderance of the virus and or more focus on social distancing, there'll be an attempt to do it online, number one. Number two, it's a very diverse and divided country that we're in right now. You know, there's a blue and a red. I'm a numbers guy, so I look at it and I say, historically, over the course of my lifetime, it's always come down to, in our case, 13 states. There are 50 states. There are 37 that are defined. They are either blue or red. There are 13 that are, in many instances, unsure and can vote either way. So if you took 3 or 4 of those 13, Florida, Pennsylvania, Michigan, and Ohio, those states, I think, perhaps Wisconsin as a fifth, will make the deciding vote. And up until January of 2020, it had to do with the economy. So given your question a moment ago, should the economy begin to come back, I think that would augur for the incumbent, but we'll have to wait and see.
I pulled out the statistics as I was thinking about this question, and it's around the approval rating before and after national crises. And there was a study done where they measured the approval rating of George W. Bush during the 11.
Yeah.
And that went from August 10, 2001 of 54% to October 10, 2001 of 88%. So he had seen a jump of almost 30% in his approval rating.
Right.
They compared it today to Trump.
Yeah.
And Donald Trump, in January 30, the approval rating was 43.8%.
Right.
And April 27, it's 43.3%. So barely no change, really.
Right.
So the question is whether the odds of how Trump went into also addressing the COVID-19 is going to play against or for his favor coming into the election.
Yeah. Look, so I don't think anybody knows the answer, and I certainly don't. But I think the difference was in the case of 9/11. You had a static event. It was New York centric. And although the rest of the country was clearly aware of that, and whatever the response was going to be, I think within weeks, people in Chicago or San Francisco or Dallas or Seattle were back to their normal life, right? I think the difference in a pandemic, and I too did some homework, if you go back and you read the New York Times or the Wall Street Journal in 1968, 2002, 2009, a virus and a pandemic was on page 36. It's now front and center. I think in some respects that has to do with the fact that we all today live in a social media dominated world where, basically anybody can read anything and frankly say anything. So we'll see how the country responds with respect to your 43 and 43. Those statistics too come from a social media platform. So I'm not sure how that will play out. We'll see.
Coach, the audience have had certain questions, so let's address them. So the first question I have is they like the analogy of Team USA. Okay. And the question is, as a coach of Team USA, who is your toughest competitor today, Coach?
That's an interesting question. I mean, from an economic point of view, clearly China and the United States are engaged in a very divisive discussion. And frankly, again, looking at the numbers, and as you know, Naji, I spent 8 years for Goldman Sachs in Hong Kong. I'm a permanent resident of Hong Kong, which by definition means I can do everything except vote in an election. So this all started with China applying to WTO in 1992 under the auspices of Most Favored Nation. It took 10 years to negotiate. They were accepted in 2002 with the caveats that in some respects, their perks were similar to Vietnam or other smaller countries that were also entering. So over the course of the next 20 years, the world sitting around the table, whether it was Europe or Great Britain or the Middle East, looked for what was China going to do. And over time, they made decisions that in some instances, countries did not think were appropriate, with the United States at the head of the line with respect to a variety of things, not the least of which was protection of patents and intellectual rights. So they are clearly a competitor. Every country has their beauty marks and warts. What I think is least known about China is that from 1960 to 1980, they had a one-child policy under Chairman Mao, which means that today they have a upside down fertility rate and replacement rate. Hence, Xi Jinping in the last National Congress encouraged families to have 2 children. Many of those families, I think, have said not at the moment. Okay, so they potentially have a $2.4 trillion credit balance, and by 2025, they potentially have a very significant number of 1.3 trillion billion people that are over the age of 65. So that's how I think about it.
And just Coach, maybe you followed this, but last week Hani, our colleague in Hong Kong, have had a webinar with Frank Tang, one of the investors in China, where they spent a bit of time on this. I want to take 2 other questions from the audience, which we are seeing. So, Coach, you've had many experiences, and you've seen many businesses performing positively or negatively. And the question here, what are you seeing in terms of percentage of business dips or weakness today? Is this the largest / the deepest dip in the business percentage-wise? And the question is how to keep business entrepreneurs motivated.
Okay, so it's not the biggest dip, clearly. The biggest dip in my career from a stock market point of view was 2011. If you want to use as a measuring stick the S&P, it was significantly worse in 2008. I'm sorry, I said 2011. It was significantly worse then than it is now. One of the interesting things in terms of the performance, again, just to pick the S&P as a poster child, it was around 3,000 or 3,100 on January 31st. Today, it's close to that. The recovery is the market's anticipatory. So particularly for those clients and those prospects that are on the phone from the Middle East, kudos to who's ever running the public investing for PIF. Because all of these companies in the United States have to announce buyers. And whoever is running that portfolio in Saudi Arabia bought Live Nation, bought Carnival Cruise, bought Marriott, bought Citigroup, bought Disney, bought JP Morgan at or near the bottom. So where people ask me in the United States, clients ask me about Carnival Cruise, went from 50 to 8. Whoever that individual was, they bought it from JP Morgan and Goldman Sachs at 8. It's 17. They doubled their money. So congratulations. Number 2, with respect to it not being the biggest dip and, how does it come back? There clearly is a disconnect between the underlying economy and stocks. And that disconnect is driven by the fact that, again, markets are anticipatory. They saw Jerome Powell and Steven Mnuchin enter the market with fiscal stimulus. So think about it. If a government is going to bring money to bear, where can the money be spent? No one was going to buy commodities, generally speaking. No one was going to buy real estate. No one was going to buy bonds. So arguably it went into Apple stock with a dividend. How long does it stay there? I think for a while.
And the other side of the question is, entrepreneurs today are facing a lot of challenges and within COVID-19.
Yeah.
I think, you're a big motivator. I mean, just the fact that you raised your hand, 9/11, went and took a position, it took a lot of courage.
Yeah.
How do these business entrepreneurs should keep being motivated?
Yeah. So look, I think two things are very important. First of all, there's no right or wrong answer to who volunteers, who is more concerned or who is less concerned. That's part of your DNA. I've always been less concerned. That's just the way I was brought up. And so from an entrepreneurial or what is your tolerance for risk, I think mine is slightly higher than anyone else's. In terms of entrepreneurs, I think, what I give people credit for is there is absolutely nothing that any individual, wherever you were born and brought up, there is nothing that any individual can control other than their attitude. You can't control the weather. You can't control what your boss thinks of you. You can't control whether or not the country has a pandemic. But what you can control is you're either looking at a glass and it's half full, or you're looking at a glass and it's half empty. And people really divide themselves that way. So to me, entrepreneurs, whether you like it or not, are glass half full people.
Absolutely. Coach, let's go back to the market because that's an important conversation here. So you covered quite a lot the public market through your, having the equity trading division, Sandler O'Neill, and you have a sense of the banking community. And we discussed this many times. And you told me the banks are part of the solution this time, Naji. Maybe you elaborate on this point, please.
Well, first of all, just to be clear, I was talking about the U.S. banking system.
Yeah.
Coming out of 2008 has been overcapitalized as a result of the rules and regulations associated with Dodd-Frank. So those capital buffers and capital cushions allowed the banks to be used as a conduit by Treasury to execute the payment protection program and Main Street lending. You could use the banks to disseminate the money, number one. Number two, with respect to why the bank stocks were down more than other sectors like technology or healthcare, that's obvious. In the aftermath of Mnuchin's decision and Jerome Powell's decision to add stimulus, the yield curve flattened. Banks make money when you have a normalized yield curve. You can pay on the short end 1% and you can charge 3%. That was not the case. Now, having said that, in my view, the real issue is, and I think Drago Kolev, our colleague, has been extremely good at this over the last decade and made our clients a lot of money. If you are paying attention and you do your research and your homework, then you can look at a bank like JP Morgan. The stock price on or about January 31st was 142. It hit a low of 88. Jamie Dimon announced after the first quarter earnings he wanted a balance sheet that was bulletproof, which meant that the reserves that he took against prospective bad loans, in my opinion, is fairly robust. So if I'm right, and if there's a vaccine, and if the economic damage is less than Armageddon, then those reserves are going to be released and they're going to look like earnings. So I think that the banks are not only part of the solution, I think they are relatively cheap as long as you've done the research to make sure that the proposed book values are correct. Lastly, again, for clients and prospects, my view is that there is not really an opportunity now to invest in equities in the United States. As I mentioned a moment ago, who was ever investing on behalf of PIF did that in March and April. And hence, now, even though you have economic pain, the valuations of those companies in the stock market is recovered. Where there is real opportunity are in the credit markets. They have not recovered across the board. It's been very uneven. And frankly, it's going to take guys like yourself and Hani and Drago to do the research and find the opportunities, but they will absolutely be there.
And I would say part of the reason as well, post credit crisis, the banks are no longer providing liquidity in that credit market. And that's why we've seen a large dislocation and deleveraging of portfolios that were invested in credit, where you can pick up good quality credit, but where they have been at distressed prices.
Right. So
and clip the yield on top of that. Yeah.
Right. So this is technical. Bear with me for all of those of you that are out there. But in the aftermath of the Great Recession, the rules and regulations had large firms like Goldman Sachs, Morgan Stanley, Bank of America, Merrill Lynch, Citigroup, taking on large tangible common equity, lots of cushion. Those banks then exited a lot of businesses that tended to be illiquid and need more capital. So this particular crisis, Naji, the catalyst was the virus, but the crisis was in credit, particularly driven by the fact that many investors in the United States no longer buy stocks and bonds, they buy ETFs and ETNs. And so on March the 23rd, there was literally a moment in time where, had it not been for Jerome Powell and the Fed, that overnight credit in the repo market and in commercial credit markets came to a standstill. Not many people understand that, but that's the reason why what you said a moment ago is 100% correct. That's where the opportunity will be in order to get a yield.
We're getting a few questions, Coach. Let's continue. One of the questions, the top 5 stocks in the S&P are at the highest percentage ever in terms of market cap.
Yep.
Do you still believe the index is representative of the US market? And how do you perceive those 5 stocks weights going forwards?
Right.
Any regulation, breakup that will not allow them to be anymore that concentrated of the market cap?
Okay, so whoever the gentleman's asking the question, those are the FANG stocks, Facebook, Apple, Amazon. Here's the way I think about it and why I said what I said about valuation. If on January 1st of 2020, the S&P was prospectively going to make $200, and if in fact you thought that $200, a normal multiple going forward was 15, you would have expected the S&P to end the year at 3,000.
Right.
Now you lose, say, one quarter or $50. So your earnings are 15, and you ask, what multiple should you have? I think the multiple going forward, because the services sector and technology is a larger portion, it's probably closer to 17 or 18 times, which in my mind would make fair value about 27 or 2,800. So I think it's fair to rich right now at 3,000. In terms of the broader question about technology, bear with me, I'll give you a history lesson. There's always an interesting partnership between Washington, D.C. and business. And right now that partnership is under duress with respect to not only the present administration, but the administration before that on platforms. And at the head of that group are Google and Facebook, where in 1996, the Telecommunications Act allowed them to be birthed and to be a platform where people could speak. There was never any discussion about an editor and what was said on those platforms. So 20 years have gone by, and those businesses are run and multiples are high and so forth. I liken this to the 1960s, where the manufacturing companies were very large. Congress was concerned. They went to the manufacturing CEOs and said, we're going to raise your taxes. Manufacturers said, why? And they basically said, you're too powerful. So manufacturers said, okay, we'll move our manufacturing overseas. And they did. The same thing is going to happen in the next 4 to 6 years. I don't think, and by the way, I'm not the guy who's proposing this. If you want to read an interesting book, you want to read Life After Google by George Gilder. But he suggests that the model that Facebook and Google have used, where you basically give everything away for free and you then get paid by advertisers, so that the underlying customer who's looking up something on Google Maps actually pays with their time, because you have to watch the ad until 5 seconds until you can skip. So I do think that they will have less importance and less of a influence on the overall index. I think they will be replaced by life sciences and healthcare stocks as a start.
Great. Question again here on infrastructure, since you mentioned infrastructure as a bipartisan agreement. What is preventing the US from launching it?
You know what? I don't think there's anything necessarily preventing it. I don't think there's been a focus, right? Again, if I were running the world for a day, I would look at our airports, I would look at our roads and bridges, I would look at our electricity grid and say, okay, they work for now, but for example, I believe the number is 72% of everything that moves across the United States, west to east or back east to west, comes over the Ohio, Missouri, and Mississippi River. Many of the locks in those rivers are run by pistons that are 100 years old. So what I would do is I would form a private public infrastructure bank. The reason why my new company would be a bank is because you can take $1 worth of equity and lever it. And then I would go to all of the companies and effectively be raising money from them, private companies. If I were Steven Mnuchin, I'd have a 100-year bond at historically low rates. If I have a 100-year bond, it's equity. So what does it really come down to? What's the answer to your question? The answer to your question is, how do you get those people involved in administration, Democrat or Republican, to recognize what's necessary and then to do it in a way that in some respects satisfies everyone's constituents.
Okay, we have almost maybe 6 more minutes left, so I'll ask 2 more questions from the audience. One is, what's your view on oil?
Well, so I think oil obviously was at the epicenter, along with hospitality and the airlines in the United States, as being impacted by COVID-19. And I think you had a demand shock because things were closing down. Then you had a supply shock because representatives from Saudi Arabia and Russia left Vienna. And obviously in the aftermath of that, there was some discussion about the way forward. And fortunately for the world, representatives from the United States, Saudi Arabia, Russia, and so forth got together and ameliorated the supply issue to some extent. However, going forward, I do think that the Vision 2030 is correct. There's going to be less need for fossil fuel. There's going to be more need for clean energy, wind and solar, and nothing takes place, at a certain moment in time. So, for example, I've always believed that natural gas in the United States was a conduit. It was a bridge to something cleaner. how quickly can you get there, to your question a moment ago. On one side of the equation, you have the Sierra Club, and you have Edwin Markey, and you have Tom Steyer, who'd like to do it sooner. And then you have producers in Oklahoma and Texas and Louisiana who'd like to take it slower. But at some point, if in the case of many of our colleagues in Saudi Arabia, the discussion and the diversification is already underway.
Okay, Coach, somebody from the team who has met you back in 2007, and today he was a young professional, part of the young professional program, is asking, what is your secret of staying young all these years? And since the first time I met you in 2007.
Just tell him when he met me in 2007, I looked like this. I was old then. I'm older now.
I would follow up, Coach, with that question.
Yeah.
You are an optimist.
Yeah.
And with COVID-19, what have you seen as good things that have happened on a day-to-day basis? Just give us your personal impression of that experience.
Yeah, so I think two things are important. One, I would put in the category of business, and one in the category of family. In the business category, I think that there was always an attempt, if you will, to look at medicine, medical advice, health and well-being, and to take advantage of platforms and technology. Yet it never really came to fruition until now. And now it is not only come to fruition, but it's second nature. So you can go to the doctor, if you will, online. You can tell your physician what's bothering you and make a determination as to whether or not you actually need to use the healthcare system, i.e. the emergency room of the hospital. Clearly, if you break a finger or you get a cut, you need, professional help. But if not, then you can begin to use the platform. That platform then will be scaled, in my opinion, internationally, where someone in Saudi Arabia who says, I've gotten an opinion that I have diabetes and I want a second opinion, can access the United States without necessarily hopping on a plane. I think that's very critical. That's a business perspective. Now, from a family perspective, and I know many of our clients, I've met their families, and I know that I'm Italian. There are many families in the Middle East and China that are all mom-centric. So I'm now speaking only for the United States, and I think the single best thing that's happened is that young moms and dads, because you weren't allowed to send your children to daycare, had to be with them all day long, to act as teacher, to act as playground director, to act as guide and coach, whatever. And I think when all this is said and done, and you said it, I am an optimist, I think it'll be soon. But I think that those children who grew up now between ages of 3 and 4 and 10 will remember this and say, hey, my mom and dad made lunch every day. We had dinner as a family every night. We got up and we worked out every morning. That's how I grew up. I grew up in a family where only one parent worked and one parent was home to praise or to hit me in the head if I did something wrong. So I think that'll be the single biggest issue globally that will be very, very positive coming out of this.
I think those who've been asking for work-life balance, they got it in COVID-19.
They got it. No commuting.
So we're coming to an end, and Coach, since you are part of the TFO team, usually we do the concluding remarks, but I would love that you do the concluding remarks, and I will give some housekeeping stuff at the end.
Sure. Look, A, thank you for having me. I think, you asked a question earlier in our segment about what do I think about opportunities and entrepreneurs. Yourself, Hani, Drago, Abdul Mohsen, you've built a very, very good business. Our clients and hopefully our prospects have benefited from conversations like this. I know David Darst did one as well, and we will continue to do that. And this is as good an example as someone who's entrepreneurial and focused as you're going to get. So that's number one. Number two, I would encourage everyone, because you all go through periods of time where you question whether or not your business will survive or something that didn't go your way. I am absolutely not a believer in that. You got to be able to control your attitude, and you got to be able to go out there and say, you know, you can read about all the pandemics going back to 1800, bubonic plague in London. Guess what? We're all still here. So, you know, in some respects, it's luck of the draw. Some people got the virus and needed a lot of help, and some people tested positive for antibodies and were asymptomatic. So be positive. Take care of yourself. Get out there. That's how I'd like to end. Go get them.
Great. And Coach, I need to share that we can always be reached. I'm sharing a slide. There are several ways you can reach the family office. And also we're having another webinar on the 15th of June with Abdullah Obay Khan. That webinar will be in Arabic, and Mr. Obay Khan will be discussing the Ubayn Investment Group, which is a very interesting Saudi entrepreneur story. On this, Coach, on behalf of the team, and you're part of the team, thank you for being here, and definitely thank you for the audience for listening to this webcast. Apologies in advance. We've seen a lot of questions. We couldn't answer all of them. We tried our best, but please reach out to us. And on this, we wish you a happy first day of the month of June.
Right.
Thank you.
Congratulations. Have a great evening, everyone. Bye-bye for now.